Okay, I'm going to quickly cover spot and futures on Bitunix. So let's go to the upper toolbar and go to spot and just click that. And straight away, by default, it's going to bring you to Bitcoin/USDT. So since this is spot Bitcoin, if you buy any spot Bitcoin, it's going to go into your spot wallet. And anytime that it goes into your spot wallet or your spot account, you can actually go and withdraw that into into another exchange, or you could withdraw it into your own wallets. If you are depositing, let's say, Bitcoin, and it landed into your spot account and you want USDT, then you just click the sell button and then you just go and sell however much Bitcoin you want for USDT. And then you can just go and transfer it out into your futures account. And then for futures, the one that I recommend is the USDT-M, not any of the other ones, just because these ones, so the USDT, so trading against Tether, this one is the one which has the most amount of volume, the most amount of liquidity, so therefore the trading costs are probably going to be at their absolute lowest. So yeah, spot and futures, fairly simple and straightforward. It's just right up here. Now I'm going to be talking about the funding rates. So in this upper toolbar, at the very right-hand side, you will see funding rates. So this is the thing that I will be explaining. Something that you'll notice is that the price of futures is going to be very, very close to the price of spot. So if we look at spot Bitcoin right now, it's $81,029. But the futures price is $80,950, right? So it's very close, but it's not exactly perfect, right? So it's going to be fluctuating, and the size of the gap between the two prices, this also fluctuates, but the majority of the time, they're going to be very, very closely linked. And the thing that keeps the two prices linked together, it's the funding rate. So the funding rate is basically like an interest rate payment that shorts have to pay to longs, or the opposite, that sometimes longs have to pay to shorts, right? So if this value is negative, that means that shorts have to pay longs. And if this value is positive, that means that longs have to pay shorts. And for Bitcoin, this interest rate payment will come every 8 hours. For other altcoins, you will notice that this, like how often this interest rate payment will come, it might depend, it might vary, it might change, depending on which exchange you're using, and also depending on what coin. So sometimes this can be brought down to 4 hours, sometimes it can be brought down as low as 1 hour. How this value is calculated is actually based on the difference between the futures and the spot price. So if the futures price is above the spot price, this funding rate is going to be positive, and longs are going to have to pay shorts. The reason why it's built in this way is because without this funding rate, it would be really easy to just manipulate the price of futures, because you could just keep buying them indefinitely with no consequences, right? But as this gets more and more mispriced, this funding rate is going to get wider and wider and wider. So this means that if you are shorting futures when there is negative funding, you're actually going to get paid to do that, right? So there is some incentive to kind of reduce the buy pressure and also increase the sell pressure. So if we reduce buy pressure and increase sell pressure, then it's going to drive the price down. And the same goes in the opposite direction too. Let me just delete these little things. So if the futures price is below the spot price, let me just pan up a little bit. There we go. If the futures price is below the spot price, as it currently is, this means that short positions are going to have to pay long positions. This means that if you're currently short, in exactly 4 hours, 49 minutes, and 17 seconds, you're going to have to pay a fee, which is this much, which is 0.0026%, to everyone who is long. So that means that if you have a, let's say, a $10,000 long position, the size of your funding rate fee for being short. So if you're currently short, you will have to pay your position size multiplied by whatever this value is, and whatever that value is, that gets redistributed to people who are currently long, right? So just to quickly sum up, the funding rate is the thing that helps control the mispricings in futures. If it is positive, that means that longs have to pay shorts. If it's negative, this means that shorts have to pay longs. And the size of this funding rate, so how big of a fee do you have to pay, or how big of a fee are you going to get paid? This entirely depends on how big is this gap between the futures and the spot. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include, like, total combined within these two guides, there's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.